Hello everyone, welcome back to my Robinhood portfolio. Let's see, for the past week I am down $400. For the past month I am down almost $1,400, guys. It is just so bad right now. The stocks are just getting destroyed by this correction. For the past 3 months, I am down $600, so that's not too bad. $630, that's not too bad. But portfolio has really been gotten just absolutely obliterated here. It's been getting destroyed. It's been getting punched in the face, and as an investor, this is what you got to go through. Again, there's going to be corrections. There's going to be, this might be the start of an epic crash. No one knows, but right now, there has been a lot of bearish waves, a lot of bearish signals in the market. As far as I think there was talks again about tariffs, interest rates going up. The Fed wants to continuously raise these interest rates, and that's really spooking a lot of investors. Let's get started with my portfolio. No kidding around here. We have AbbVie Pharmaceuticals, $81. My average cost is $80. Total return $13 for 10 shares. The dividend yield is much more than that thanks to the stock dropping. I think it's actually around 4%, which is not too terrible. This will give me about a $9.60 dividend, so not too bad there. Dominion Energy, $71. I kind of just jumped into them. I bought this a little bit high, but that's okay because I really like these utility stocks during market panics, market sell-offs. A lot of money seems to be moved into the utility sector. Utilities is a sector that a lot of people use, so it makes sense. 15 shares at an average cost of $72. Total return minus $13, and the dividend yield is, I think it's actually around 4%. Robinhood, the Robinhood app is really, it's not. I wouldn't say they're inaccurate with their dividend yields because stocks have just been falling as of late. Next stock in my portfolio, General Mills. I actually traded out Home Depot, guys, for maybe some of these higher yield companies that are on sale. I actually like what Home Depot did for my portfolio. I might regret that later because I think they're going to have a good earnings report thanks to that hurricane. But General Mills is on sale. I really like their dividend yield. Average cost $44. That's not terrible. I can live with that. Minus $6.60. Portfolio diversity, 6%. Dividend yield, I think the dividend yield is actually closer to 5%. So it pays 49-cent dividend, and this will give me about $9.80 for the shares that I have. People need to eat. People need to eat, and General Mills is a staple. It's a consumer staple that I like that's on sale. I've held a consumer staple before in Procter & Gamble. You guys saw the success I had with Procter & Gamble. I was actually up almost $150 with that stock. I should have just kept the stock in my portfolio, guys. I had Johnson & Johnson. I had Procter & Gamble at really, really good average cost. I'm not sure why I sold. You live and learn, guys. Iron Mountain, $31 currently. They had a good day. 65 shares. I've been going all in on this stock. Portfolio diversity 14%. Total return $57 today. This dividend yield is actually closer to 8% thanks to the stock price dropping. But this dividend yield will pay. I think they increased their dividend yield off this earnings report. It's a records management company that stores record data for companies, and they're starting to get into the computer data, and not only for paper records management, but computer records management as well. But this will pay me about a $39 dividend. It's really, really good if I just hold on to these shares. I have a lot of faith in Iron Mountain here. I know they've been recently downgraded by an analysis, but this is definitely this is actually one of the more safer real estate investment trusts on the market. McDonald's, don't have to say much about them. A lot of people think that this stock is recession-proof. A really good business. They had a good earnings report maybe about a week ago. I think they reported earnings a week ago. Average cost $65. That's, in my opinion, high for this stock price, but I really need McDonald's in my portfolio so I can, sort of keep the portfolio, a blue chip perspective in the portfolio along with Microsoft, and that's one of the reasons why I like Home Depot, because it gave me another solid blue chip company. Dividend yield is actually closer to 3%. They increased their dividend yield to $1.16. So I think I'll get $11 dividend out of that. That's pretty nice. Microsoft, a lot of tech stocks got really just buried today. I think Amazon fell another $100. Apple's back down to 212. Texas Instruments is getting beat up. Netflix is going back down to like 250. There's a lot of these FANG stocks. A lot of people thought that FANG stocks were ready to go. The hype was still on, and they're buying the FANG stocks high. And the rich are pulling out. Actually, I think the rich are already out. And right now, what you're seeing is all these investors who are, they're panic selling. They're selling, and they want out, and the rich is already out, and they're just waiting for this to all clear out before, before buying back in. Shares, 20 shares for average cost 105, down $34. I don't care. I actually like Microsoft more than Apple now, guys. Microsoft is a good company. They're actually I think they're the second most profitable company in the world right now. It's really crazy. Dividend yield is kind of flimsy, but again, I need to keep the portfolio perspective in the right track. Kind of put some high dividend yielding growing stocks into the portfolio, and that was one of the reasons why I sold Visa. Because Visa, as great as a grower it is, the dividend yield just wasn't high enough for my liking. NRZ, New Residential Investment Trust, 17 cents. This is actually a very interesting stock. It's M Mortgage Real Estate Investment Trust that should perform well in this rising interest rate market. 50 shares for average cost of $17.59. I really wanted to just bag up the truck and get a lot of this NRZ stock when it hit about around $15, maybe $16, but I'll live with the $17.59 average cost. Dividend yield is dividend yield to many is very unstable. That's really high. 11% dividend, but they have a good track record of just maintaining that dividend. And you look at their earnings reports; it's really solid. They've really been killing their earnings. There's really been no problems with the stock. Maybe some whispers here and there, and I just like them. They pay a good dividend. Again, I think this is one of the more riskier stocks in the portfolio right now, but, I don't want the portfolio to just be, super safe or something like that. I want some risk in the portfolio, and I think this is a pretty good risk, a pretty good bet here. Shell company, down on Shell, $16, average cost $64. So I traded out Enrich for Shell. I just like these little large market cap stocks. I know Shell dipped really bad when the oil crashed around that 2015, 2016 year. The oil crashed, and it was just at super cheap prices. A Shell company at $36. But, they've been able to maintain that dividend. They've been able to maintain that 94-cent dividend, and I would get actually paid $23 if I just hold it to my shares. It's a really, really good company. One of my favorite energy stocks in the market. So AT&T, $29. They have been trending back. I know Verizon has a better balance sheet. They have better earnings. They just look more stable than AT&T right now. AT&T has a lot of debt. I know what I'm getting myself into when I buy the stock. 55 shares, the average cost $29, and total return today was actually very good, $26. Dividend yield is actually sitting on 6% right now, thanks to the stock dipping. But right now, AT&T, they've been around, guys. They've been around. I know Verizon is looking more and more by the day that Verizon was the safer pick, the safer telecom pick. But AT&T does own Time Warner. They have merged with Time Warner. And they want assets. I know it increases the debt, and it sort of plays on their outlook as far as how when the markets are crashing and everybody's getting out, and you owe debt. That's not really good. But it's what's worrying investors about AT&T is, are they going to cut that dividend? And I think when this dividend does get cut, we're going to see AT&T probably end up like GE. GE cut their dividend. That really tore up the stock. I think the stock dropped another $7. So but you know what? I think the dividend they still have a good market cap. P ratio is still very friendly. I think AT&T will figure it out. They'll figure it out. Yeah, UPS $105. I wish I would have bought it right here. $109 average cost for 15 shares. Portfolio diversity 11%, down $69 with them. Yeah, guys, this is my portfolio, high dividend yielding portfolio. I want to sit on these dividend stocks. Nothing has been sold, with the exception of Home Depot, because I want to try to get those my yield percentage up in dividends. I look at a stock like General Mills. They are on sale right now. It could go lower, but they have a 5% dividend yield that I really like. 49-cent dividend. It's really hard to turn down, especially in a correction market and a bearish market right now. So if you look at what's been happening, all the FANG stocks, all the technology stocks that don't pay dividends, all these growth stocks that aren't paying dividends, they're getting hit the hardest. And the reason why they're getting hit the hardest is because they don't pay dividends. There's nothing holding that stock up when the market is crashing and the market is selling off. But when we look at stocks like General Mills, when we look at a stock like this, why is this stock up? Why is the stock green and the market, the whole market in general is red? The reason why is because, well, it could just be the sector is up. Consumer staples or maybe just did very good today. But again, these dividend yielding stocks, that gives something that investors can hold on to. They can say, hey, I don't care if the market falls. I know I'm going to get paid like a $500 dividend, dividend collect that I'm going to put back into my bank account, and I don't have to worry about selling my shares. I actually, if the stock goes down, I'm just going to buy more shares, and that's what I've been doing. I've been buying more shares of T. Look at AT&T. Average cost is $29. Since when was AT&T $29? Let's just find out. February. Look at that. It's $40 right now. 38, 36, 34. When was the last time this was $29? When? Look at this. I have to actually go all the way back to like 2012. I can't find it. Wow. But yeah, guys, that's the reason why. That's the reason why these stocks, look at AT&T up 1%, almost 2% today. So these dividend-paying stocks, people have more reason to hold on to those because they know they're going to get paid in dividends. And I'm pretty sure Warren Buffett, he didn't sell anything today because he gets paid billions and millions of dollars worth of dividends. So it's pretty crazy, but this is what happens. You guys, once again, down $400 for a week, down almost $1,400 for the month. It's just been a crazy month. What can I say? It gets like that sometimes. That's going to do it, guys. I'm going to cut the video here. Comment, rate, whatever, and I'll see you next time.